What's going on, guys? It's SheepUP baby. Welcome back to another video. Today we're going to take a look at last week. I'm just going to talk a little bit about the delivery of last week. It was very interesting, so to speak, and I did want to get back more into the more technical analysis of things. So this isn't a daily review. This isn't, well, it is, I guess, a weekly review to an extent, but I'm going to be talking more of the technical aspects and how I approach the chart. So hopefully you find this useful. Do be patient, sit back, relax, and yeah, I'm going to be looking at GBP USD specifically. And you can see that this is the week we had, and you can see we expanded right in towards our buy side target quite aggressively. But there's a few things I want to draw our attention to and how I actually break down the charts. So you'll see that this fair value gap I had my eye set on, and then you'll see how we grabbed these stops before expanding higher. So it was pretty clean. This kind of price action right here is very clean to me, and the reason for that is because you can see how there's no volume inside of this weekly fair value gap, which shows bullishness. And then I like the fact that we ran out the previous week's lows before trading on higher. That's very classic price action. And then as we drop down to the low time frame, you're going to see how that happened on the Monday. But these are just a few things I want to draw attention to. So knowing where the fair value gaps are and understanding that the fair value gaps are when you split into quadrants, you'll see how they get respected. So here the 50% level was respected on the weekly, the previous week. And then the 75% level was traded to here, but then you can see our price left it quite nicely. We will drop down to the daily, take a closer look, and you'll see on Monday we traded straight lower, creating the low, and then we closed above Friday's high, again showing bullishness. And then if you watch my videos this week, you'll know that I called this high being used, and you can see our price traded into that, and then expanded and carried on trading higher. Now, I didn't expect us to be so bullish. I was expecting these highs because they're relatively equal highs, but it was interesting to see how bullish we were this week, so that was very interesting. So I'm going to clear the charts just to make it a little bit more clear. We'll start on the weekly again, just so that we can pay attention to a few things. I'll get that delineated as well. Remember, this is that weekly fair value gap, which is significant to guiding ourselves. And then we also have this south side liquidity from the previous week's low. Now, as we drop down to the 4 hour, this is where you can start to see a lot more detail as into how we're trading. So we're in a consolidation for quite a bit. You can see we ran buy stops, and then as soon as Monday opened, price traded lower, grabbed sell stops, and then it was expansion. And what I want to show you is look at where we find support. So these are relatively equal highs, this high, this high, this high. They're all relatively equal. And as soon as we ran out this significant swing high, because this is the highest high, you can see how price does a small pullback, and you'll find that if you study price, this is classic price action in terms of us running a high, there being some kind of pullback, and then what usually happens at this point is the price is either going to continue expanding or it's going to reverse. In this case, it continued expanding because we had obviously a bullish target, and I can imagine moving into new week it will continue as well. But my point is we can anticipate these things. So if we were long during this position, I'd want to offset most of my position here with the expectation that it's possible that we may return deep into the 50% level, because it's classic for price to want to trade back down towards that. Now, another thing I want to draw attention to is the way that it's left this gap open. So you can see that there was a run on stops. Every time we take out a swing high, there's usually some kind of run on stops. Let me just change that to buy side liquidity. Every time we take out a high, there's usually some kind of run on stops, and this is pounds run on stops right here. Very, very slight, and this is important because when price runs out stops like this, and I'll make this a circle. When price runs out, can I zoom in? When price runs out stops like this, very, very slightly, and then continues, it shows classic bullishness in that it didn't spend much time down here whatsoever. It just tapped it and left, and it was in a rush to do so. And this was by Wednesday as well. So again, Wednesday we either expect like a reversal or some kind of pullback or continuation, and that's what we got. And then another thing to take note of is again, quadrants. If we look at this wick, look at how we respect the 50% level. Again, very classic price action. So when you start to recognize and mark out these things, this is how I'm able to expect certain levels. Because when I'm here talking every day saying, oh, I'm expecting to come here, I'm expecting to come here, it's not based off nothing. It's based off common behaviors in the market that you'll find happening over and over again as to where you can then enter positions based off that fact. So the way I'm looking at this wick is gaps too. So ICT said himself wicks are gaps too. and so this wick should be treated as a gap. Now, as far as I'm concerned, the 50% level of that wick should stay intact if we're going to remain bullish, and it did. And then as price drops down into this, I can then split this now into a range as well. And then when we drop down to the lower time frame, so let's say the 15-minute, let me just scroll across. This is all rejection block levels. So price failed here to take out this low, and then price failed again here to take out this low. And then another thing we're going to take note of is the time in which these things are happening. So let's go to the 5-minute, and let's look at the time in which we're coming into this range. Remember, this is a wick from the daily. So price traded down into this at 9 a.m. New York time. That is a very significant time in price action if you've been studying it correctly, where we expect a reversal to form, or we expect expansion, because it's after the news. News forms at 8:30. There's usually some kind of rally, and then a retracement around 9. That's what we get here. The retracement, 9 o'clock, we come down. We trade into a fair value gap right here. And then that would have been our opportunity to essentially go long. Now, obviously, hindsight is beautiful, because obviously, you know, there's only so much we can do. I mean, with hindsight, you can, you know, anyone can call it out, is what I'm saying. But my point is, these things are happening at certain times, and when you're aware of certain market behaviors which happen over and over again, such as the fact that it's going to return to certain wicks from higher time frames. Remember, we just looked at the daily. Sorry about this. We just looked at the 4 hour even. We just looked at the 4 hour, and you can see our price is respecting the 50% level. This can be anticipated because we've already taken out lows below here, and there's a possibility of continuation because of buy side liquidity that we had residing up here. So as price is coming down into this at 9 o'clock, between 8 a.m. and 10 a.m. generally speaking, we should be looking and expecting some kind of longs. And within this candle, there's going to be loads of time. There's going to be lots of time for us to go long. And let's say the candle's looking like it's down here. Let's say the candle opens here. Obviously, it can be nerving wanting to go long off the back of that, especially not knowing if it's going to retrace back and deeper into the range that it's already created for the week. So with that taken into account, there is also trading methods where you can actually go long on the back of the high of the candle. So if there's possibility that this is going to become a bullish order block because we came down, we grabbed stops, we came off the low of it, and we know that the stops residing in the premium, there's a method where you can go long as soon as price trades through that high. So let's just get that delineated in purple. We'll make it dashed or dotted. We'll go down to the 1 hour this time, and you'll see this is just a classic reversal. We got 3 candle turn, and as soon as we run out, as soon as this candle closes above this is now a bullish order block, which means that if price is going to tap into it, which it doesn't, but if it does, we expect it to act bullishly, but it fails to even do that, which is signifying to us that, okay, we're likely going to continue. So where's our target? Well, we have relative equal highs up here, and then I'd simply look for the last up close candle. We have an up close candle here. That's what we call a breaker. And if you drag that through, you'll see price taps into it here. So we've got a low, we've got a high, we've got a lower low, and then price expands nicely, closing above the bullish order block. That now validates this range as a bullish order block, and price is coming back into it. So if it's coming into a bullish order block, what should we be able to do? Go long. So these are all points within trading where we should be comfortable with the potential of placing positions. And then, like I said, we had much higher time frame. If you were watching my videos last week, much higher time frame objectives for us to reach up into the premium. So that's just a few things which I wanted to speak about. It was really nice delivery, I think, today, this week. I had a very good week, and it's just breaking it down from the higher time frames and analyzing it, because a lot of people forget that everything's based off the higher time frame. Price is fractal, but it's all based off the higher time frame. In that we should understand what this range is. This is a weekly fair value gap, and price is not spending time in there. Yes, it traded into it here. It closed above it. Spent time in it here. It closed above it. You know, we're seeing hints of bullish nature, which is what we need to look into. And then if we look at this entire range, this low, high, lower, low, we can look at this as a breaker as well. And again, with that taken into account, let's look at the last up close candle before that down move. Why this down move is significant. We've taken out stops. We've taken out stops here. This is a fair value gap. So now I'm looking at the last up close candle, drag that through, and that's what we'd call a breaker as well. So now we've got 2 layers to a breaker, which would add to our confidence in wanting to place a position. So if we go back to the 1 hour, remember this level is now a breaker, isn't it? So we know that all this time that price is spending playing around here, we should be accumulating. And then as price leaves it, you know, again, you can enter as price is running out buy stops. And I just showed you 2 positions on the lower time frames where you may want to go long. But again, what's significant is the time. So remember that we just looked at the 4 hour or daily, was it? And this was now a breaker, right? So as price comes down into it at the significant time, which is 9 a.m. and we find ourselves deep inside, well, nicely inside of it, and we're coming off of it, that should be enough for us to be comfortable to go long. Stop loss below here, and then again we can either target here depending on how risk averse we want to be, or our higher time frame objectives. And then you'll see our prices manages to do step its way up. And then another thing we can look at is measuring. So if we look at this range, remember this is the significant range which I'm looking at, the way we turned here. This is what I forgot what you call it now. But my point is we can level this. So look at this low, high to this low, and level 1 could be a target, and then we can anticipate that level 2 is now going to get traded to. Now we didn't reach it this week. We may next week, and you know, turn on post notifications for Sunday's video. But my point is we can use these as points whereby we expect price to either find support and resistance. I'm not going to get rid of that one. Get rid of that one. And look what happens. As soon as we aggressively trade through here, what do we have? We have a small pullback, but we don't spend long. Tiny pullback, and then continuation. And then, I'm not going to lie, Thursday and Friday was quite messy in general. But yeah, I just wanted to speak on that really. There's not really much more for me to say. I hope you learned something from this. Just a little bit of analysis, a little bit more of technical analysis. If you want me to do more of these, do drop a comment below, because I'm happy to, and I'm just in the mood right now. But that's the way I'm looking at the price, and that's why I'm able to trade, because I'm looking at the time we're trading into certain levels. And again, this is classic. This is very classic. We create a low at 8:30, classic. We have a large run into buy side liquidity, classic. Pull back to the breaker, last up close candle here. If we drag that through, sorry. Voila, look at that. So even on the lower time frames, we're seeing the point at which we should be buying. And then there's other hints that add to this. So there's a fair value gap right here, for example. We don't trade into this fair value gap. Why don't we trade into that fair value gap? That's what we call a breakaway gap. We want to see that get left open. But it's trading into the last up close candle before the significant down move, which creates the low of the weekday. Sorry. Run out stops, this is significant swing high. Go long, and look at this. Look at the reaction of that. Beautiful. And then if you miss that, you wait. What for? Fair value gap, low, high, go long. Fills it. Yes, it's high resistance. It's high resistance because it needs to get out of all this range, remember? And then it simply just look for a next target up here. And it was just beautiful seeing the way that price was just treading on higher and just carrying on rallying. Now, it's all context related. And remember, when I analyze the charts, I usually start from the weekly, and I'm able to work my way down, and then I'm looking at the time of day, and I'm looking at biases, etc. And obviously when prices come down here, it's like, okay, how don't you know price is going to keep going lower? Well, again, look at the time. It's 8:30. We've traded into a significant, remember these, we just spoke about this. We traded and respected wicks. And then we have an expansion above, what was this? This was a breaker, wasn't it? And it's a breaker because we've broke through price, and look at how it's closed as well. You got to look at the length of these candles. Look at how nicely that's closed. High resistance, high resistance, high resistance. Clean, very clean. And then it turns back into its fair value gap, and then that would be the opportunity to go long. This stays open, so you can put your stop loss 50% level of that, and then I'd simply just target up there. But yeah, very interesting. I hope you found this insightful. Don't forget to drop a like, drop a comment, smash subscribe, join the Discord. All the links in the description. Let me know if you want more of this, and I'll catch you guys Sunday. Peace.